how would you apply that same mentality to how you're sizing your debut fund?
I think there are two main inputs to sizing your fund, and there's a lot of logic inside of this. And Aggie may have a different view. So we also have, I have more buyout. She has also buyout and venture, so we can give you both vantage points. In buyout, you're expected to do between 8 and 10 deals in the first fund, which would be optimal, give you enough uh, breadth, but allow you to serve on different boards, so you have enough people to sit on boards. So the first criteria is investors are going to look to the track record you bring and the best deals in your track record and what size were those. And so if you take the average size of some of your best deals in your track record and multiplied by 8 or 10, and that's going to be the range of fund size. Now, sometimes new debut teams, I really encourage people to get through fund one and get to fund two as quickly as possible. So sometimes, because fund one fundraising is much harder, if you have attractive deals, maybe have a slightly smaller fund size, and that combined with that teams may be leaving a larger shop and coming in because they want to get into the slightly more fragmented, slightly smaller end of the middle market, and then you start justifying the degree of fragmentation, the competition for deals is a little bit less in this universe. And so you start describing to investors why in this sector, whether it's healthcare, industrials, consumer, why this size is the optimal size. And maybe you're the one taking these companies into their profitable stage, and maybe making them attractive to the next buyer. And what is your point of insertion to bend the arc of these companies? And while you're to make that change and understand the universe, obviously the teams understand the universe best, but the size of the fund really has to generate off of a good deal set that can be 8 to 10 deals in their first fund.
I think building off of that, envision yourself in the meeting with LPs when faced with a question of how did you come up with that fund size? Like, you need to have the pitch on the bridge that takes you from past experience to future ambitions. And so think of what you've done in the past, how scalable is that in your current construct, and how would you build a portfolio? There needs to be a really sensible story. And so to give you an example, if you've invested $30 million out of your attributable track record, how are you going to bridge that to a $300 million fund, for example? Do you have another partner? How many deals per partner per year? It could be very formulaic, and I realize reality never matches formulaic theses like that, but it gives, again, that intentionality and that purposefulness of, this is how I'm building my team, this is how I'm building the portfolio, this is why I think this is an appropriate fund size, and again, be ready to shift down. To Cheryl's point, tough fundraising environment, you want to raise that first fund, you want to perform extremely well. Second time around will be easier. So it all needs to really make sense and flow. The other thing is just co-investments, right? They'll help you punch above your weight. And so if you identify limited partners who want to co-invest alongside you, see that as free leverage, right? In the sense that they'll be able to just make you a bigger fund through their participation outside of the fund ticket. So that's what I would say. I think it pertains to venture and to buyout, just in varying degrees.